Tracking your net worth is crucial if you want to grow your wealth. But here's the thing, not all metrics are created equal. If you're like most people, you might be tracking things that just don't move the needle. Let me show you exactly what I track and why it's the only way to get real insight into your net worth growth. Now, you might think tracking your assets and liabilities is enough, right? Well, it's not. The truth is, there's something deeper that most people overlook. I'll share that in just a minute, and I promise it'll change the way you think about wealth tracking. But first, let me give you the basics I used to track early on. When I first started out, I tracked all the typical stuff: bank accounts, investment portfolios, liabilities, real estate. But the more I did it, the more I realized something was off. Tracking assets alone doesn't give you the full picture. That's where most people stop. But here's what they don't understand. It's all about tracking growth potential, not just what you have today. What really moves the needle for me? It's not the static numbers. It's the investment vehicles that drive my wealth over time. I'm talking about how I leverage things like real estate income, stocks that pay dividends, and long-term assets with real compounding potential. If you're still focused on checking account balances and outdated net worth apps, you're missing a huge opportunity. But it goes beyond just tracking these things. How do you know which of these assets are actually growing your wealth? That's where you need to dive into the return on investment, ROI, for each of your holdings. I use a simple yet powerful strategy that's not reliant on any affiliate links or money-making software. It's a mix of manually calculating and using a few key financial tools. Here's the trick that took me years to figure out. I measure the impact of each asset on my future net worth. I look at the growth rate, not the total balance. A stock might look good now, but is it producing passive income that I can reinvest? Or is it just sitting there, waiting for a market uptrend that might never come? That's the kind of analysis that gives me real insight. Now, let's talk about cash flow. You need to track how much money is moving in and out of your accounts. Not just any cash flow, though. I track the money that's generated by passive income streams. If you want your net worth to grow consistently, it's the passive income that counts. Stocks that pay dividends, rental properties that bring in rent, businesses that run on autopilot, those are the things that really move the needle. The key here is future-proofing your wealth. It's easy to get bogged down in short-term fluctuations, but if you're always thinking about how each asset is going to perform in the long term, how it will continue to earn, grow, and scale, that's how you truly grow your net worth. Now, here's the part you've been waiting for. The one thing I do that most people miss is tracking my growth forecast based on historical data. I track how my portfolio would have performed if I had made different decisions earlier. What would my returns look like if I had taken that real estate deal 5 years ago? What if I had pulled out of that tech stock when it was at its peak? This lets me adjust my strategy going forward and predict where my wealth will be in the next 5, 10, 20 years. So if you want to track what really moves your net worth, start thinking about your growth potential, cash flow, and future forecasting. These are the tools I use, and they've given me a more accurate understanding of where I stand. Now, I want to hear from you. What's your biggest struggle when it comes to tracking your net worth? Drop it in the comments below and let's talk about it. If you got value from this video and you want to support content that isn't incentivized by affiliate commissions, hit that subscribe button. I'll see you in the next video, where I'll dive even deeper into advanced strategies that will move the needle for you.